Welcome to the Radio Revenue Podcast. Hello, curious minds. You've tuned in for your shortcut to being truly well-informed. Today, we're embarking on a deep dive into the latest annual report that's the Form 10-K for the fiscal year ended March 31st, 2025 from SterisPlayer. Our mission, well, it's to cut through all that dense financial jargon, pull out the really important nuggets of knowledge, maybe some surprising facts about this global healthcare player.
Exactly. And SterisPlayer, it's not just, another company. They're a leading global provider.
Yeah.
Their mission statement really says it all. We help our customers create a healthier and safer world. So this 10K gives us a really fascinating, detailed look into how they actually do that.
Yeah.
From their operations to the complex challenges they navigate.
Okay, let's unpack Steris Business Foundations then. A company this big, it usually has distinct divisions. How does Steris structure things? What does each part actually do?
Right. Steris organizes itself into three distinct reportable segments. These are healthcare applied sterilization technologies, and we can probably just call that AST, and life sciences.
Got it. Let's start with healthcare. What's the scope there? What falls under that umbrella?
Okay, the healthcare segment is really all about supporting healthcare providers globally. Think of it as their comprehensive offering for sterile processing departments, procedural centers, like operating rooms, endoscopy suites. So this means everything from the everyday infection prevention stuff, the consumables, to the big capital equipment like sterilizers, and crucially, its ongoing maintenance. Also the repair of usable instruments and even outsourced instrument reprocessing services. They pretty much cover that whole cycle.
Wow. Okay, so if I'm running a hospital, Steris isn't just selling me a machine. They're providing like an entire ecosystem for keeping things sterile and safe.
That's a good way to put it. It's incredibly comprehensive.
Okay. What about AST, Applied Sterilization Technologies? What role do they play for the broader medical and pharma industries?
AST, yeah.
Yeah.
They're a critical partner for medical device and pharmaceutical manufacturers. They offer contract sterilization and lab testing services through this global network of facilities. And what's really interesting is their technology-neutral approach.
Yeah.
They basically help customers from the initial testing right through to final sterilization, whatever method works best. Plus, they manufacture the integrated sterilization equipment and control systems themselves. So it's kind of a full package.
A complete solution, really. And finally, that third segment, life sciences.
Right, life sciences. This one caters specifically to biopharmaceutical and medical device manufacturing facilities. Big emphasis here on aseptic manufacturing, keeping things absolutely sterile during production. Their product line includes specialized things like pharmaceutical detergents, clean room disinfectants, pharma-grade sterilizers, washers. They also provide these cutting-edge vaporized hydrogen peroxide, or VHP, room decontamination systems. And of course, they offer all the installation, maintenance, upgrades, repairs for that complex equipment. They keep pharma production lines running clean.
So we've got those three clear segments now. But the report mentions a pretty significant structural change, didn't it?
That's right, yeah. They used to have four segments. The dental segment was divested, sold off, and this isn't just a minor tweak. It's presented now as discontinued operations, and they've adjusted all the historical financials. It really signals a strategic streamlining, a move to sharpen their focus on these core healthcare, sterilization, and life sciences areas. Looks like a deliberate portfolio optimization.
Makes sense. Okay, with those three core pillars in view, let's switch gears and check their financial pulse for fiscal 2025. How did this multi-segment business actually perform? Let's dig into the numbers.
Well, the report paints a picture of pretty robust financial health, actually. Total revenues for fiscal 25, they hit nearly $5.5 billion. $5,459,515,000 to be exact. That's a decent jump from about $5.1 billion the year before in fiscal 24. But here's where it gets really interesting. Net income. It saw a massive leap, climbed to $616 million in fiscal 25 compared to $380 million the prior year.
Whoa, hold on. That's a huge jump in net income, nearly doubling. What does that tell us? Is it just the divestiture or?
Good question. It signals more than just revenue growth. It points to improved profitability, better efficiency across the board. And look at their free cash flow, too. That also increased notably. Hit $787 million in fiscal 25, up from $620 million in fiscal 24. That shows strong operational cash generation. They're turning those sales into hard cash very effectively.
Okay, so strong top line, even stronger bottom line, and good cash flow. How did the segments break down revenue-wise?
Right. So healthcare was the biggest chunk, nearly $3.9 billion. AST brought in just over $1 billion. And life sciences added a bit over $542 million. What's kind of fascinating about AST is its growth rate. Revenues there increased by 8.9%. But get this, 9.1% constant currency organic growth.
Okay, constant currency organic growth, unpack that a bit. What does that specifically mean for AST? Why is that number important?
That 9.1% is a really powerful indicator. It tells us Steris isn't just growing AST by, say, buying other companies or benefiting from exchange rates. They're expanding their core sterilization services organically. It's driven by both increased pricing and more volume, more demand. It points to a very strong, very healthy segment, high demand for what they do.
And it looks like future demand is strong too, based on the backlog numbers.
Absolutely. Their backlog, which they define as unfilled capital equipment purchase orders that increased, it hit $452.9 million by the end of March 2025, up from $425.2 million a year before. Most of that, about $369 million, is in the healthcare segment, another $84 million or so in life sciences. This isn't just wishful thinking, it's near-term revenue visibility. These are firm orders they've already locked in. Think of it like a guaranteed pipeline of sales for the next few quarters. Very strong signal.
Right, that gives investors some confidence. It's fascinating how these strong financials are supported by, well, a huge global team. Almost 18,000 employees in fiscal 25, right? Excluding dental.
Exactly. 17,787 to be precise.
And it's those people working within certain principles who drive the operational side. So let's pull back the curtain a bit. How do they manage such a vast operation? What about quality, innovation?
Yeah, continuous improvement seems absolutely fundamental there. They apply lean principles, that methodology focused on maximizing value, cutting waste across all functions. They really foster a culture where employees are empowered to drive change, using tools like Kaizen events, those short, intense workshops to solve problems quickly.
That proactive approach sounds key, and I imagine intellectual property is crucial in this field.
Oh, absolutely. Their intellectual property is a major competitive advantage. As of March 31st, 2025, they held, 107 U.S. patents, over 2,300 patents elsewhere, plus many pending, and trademarks too, around 2,145 registrations worldwide. These aren't just pieces of paper. They protect their innovations, their brand names, critical for staying ahead.
Makes sense. And in an industry so tied to health and safety, quality has to be paramount. How do they assure that, especially with all the regulations?
Their quality assurance procedures are, well, incredibly extensive. Covers everything from incoming materials through design, manufacturing, distribution, the whole chain. But what's particularly noteworthy, really stands out, is their regulatory compliance record. It's exceptionally strong. In fiscal 2025, Steris had 0 FDA warning letters, 0 seizures, 0 consent decrees, and maybe even more impressively, 0 Class I product recalls, not just in 25, but also in fiscal 24 and 23.
Hold on, 0 warning letters or Class I recalls for 3 years straight. In the medical device world, that's genuinely remarkable. What does that suggest about their internal processes compared to others?
It's nothing short of exceptional, really. I mean, in an industry where even minor recalls can cost millions, damage trust, this record speaks volumes. It points to a deeply embedded culture of quality, rigorous risk management, and operational maturity that, frankly, few competitors can probably match. It's a huge competitive edge and builds immense trust.
A powerful differentiator indeed. Okay, beyond product quality, what about their broader corporate responsibility? ESG is such a big focus now.
Right, and they seem quite committed here, too. Their corporate responsibility function is led by a VP of ESG, supported by senior execs, and they have a global sustainability steering committee. On the environmental side, they're tracking greenhouse gas emissions, scopes 1, 2, and 3. That's pretty comprehensive. They report this through the CDP, the Carbon Disclosure Project, and they're actively working on reducing impact. Things like product reformulation, ultra-concentrate chemistries that cut waste, less packaging, using recyclable materials. Plus, they're preparing for the EU's new CSRD, that's the Corporate Sustainability Reporting Directive, expands ESG reporting quite a bit. And they've done climate scenario analysis using the TCFD framework, Task Force on Climate-Related Financial Disclosures. So they're looking ahead at climate risks.
So they're not just talking the talk on sustainability, they're measuring, reporting, preparing for new global standards. What about their supply chain and their people?
For the supply chain, they have a strict supplier code of conduct, expecting ethical behavior, compliance with laws like the UK Modern Slavery Act, the U.S. Foreign Corrupt Practices Act. They also have a conflict mineral sourcing policy focused on responsible sourcing of tin, tantalum, tungsten, gold, trying not to fund conflict zones. And then human capital management. They really emphasize their people are key. Big focus on safety, diversity, inclusion. Their safety stats are impressive. The 2RR total recordable incident rate was 1.11. The LTR lost time incident rate was 0.38 in FY25, both well below industry benchmarks. And 13 of their sites have the OSHA VPP Star Award. That's a top safety recognition. They do regular employee engagement surveys too, got an 88% participation rate in FY25, which is really high. Shows strong engagement, leadership effectiveness, speaks well of their internal culture.
Okay, so strong foundations, meticulous operations, clear commitment to responsibility. But like any company, they face challenges. The report details some significant risks. What are some of the major hurdles, Steris flags in the 10K?
Yeah, that's always the other side of the coin, isn't it? How does a global company like this manage such a wide range of risks? First off, regulatory requirements. They're subject to extensive government regulation worldwide. It's not just a hurdle, it's a significant ongoing expense. And non-compliance. That can lead to severe penalties, fines, injunctions, recalls, high stakes.
And the market itself must keep them on their toes.
Absolutely. Competition is fierce. They operate in markets with lots of players, big and small. You're competing on brand, design, quality, price, service. Everything requires constant innovation just to stay level, let alone ahead. Then there's geopolitical and economic instability, always a factor for global companies. Things like trade policy changes. They mentioned tariffs introduced early in 2025 that can directly increase costs, mess with supply chains, maybe even reduce customer demand. And they also note, crucially for them, shifts in healthcare policy, reimbursement levels, especially from government programs. That can significantly impact their business. Constant uncertainty there.
That's a lot to juggle already. What else is on their risk radar?
Fourth, and this is a pretty significant one recently, ethylene oxide litigation, EO. There's a major event. A settlement of personal injury claims linked to EO emissions from a facility they used to operate in Illinois. In March 2025, Steris agreed to pay up to $48.2 million to resolve basically all these claims in Cook County, Illinois. Now, they state it's not an admission of liability, but still, it highlights the potential for substantial costs, reputational damage from these kinds of issues.
Right, and beyond the immediate $48 million payout, what's the sort of deeper risk here? The report hints that if EO sterilization itself faces wider regulatory crackdown, that could be a bigger problem. How critical is EO?
That's a really critical point. EO is, well, it's a very widely used, very effective way to sterilize things, especially medical devices that can't handle heat. If its use were significantly curtailed by regulators, and there's pressure in that direction, it could genuinely impact surgical procedures across the board. And that, in turn, could reduce demand for many healthcare products, Steris included, because those products rely on effective sterilization. It's a systemic risk for a big chunk of the industry, not just Steris.
Okay. What else?
Fifth, cybersecurity risks, always present, especially for a global tech-reliant company. They said no material cyber attacks in FY25, which is good, but they acknowledge the inherent risks. They have an enterprise risk management program, a dedicated cybersecurity steering committee, an incident response team. They're investing in defenses, training. But challenges remain, with remote work, evolving regulations like GDPR in Europe. It's a constant battle.
And finally,
their debt levels. As of March 31st, 2025, they had about $2 billion outstanding. Now, their debt-to-total capital ratio actually improved because they used proceeds from asset sales, like dental, to pay down debt. That's positive. But still, significant debt levels can limit financial flexibility, make future borrowing more expensive. Something to watch.
it's definitely a complex environment. And the report also mentions this unresolved staff comment from the IRS regarding their 2018 taxes, potential $50 million liability.
Yes, that's in there. 2 notices of deficiency from the IRS for fiscal 2018. Could be a cumulative tax hit of around $50 million. Now, the company strongly disagrees and is contesting it.
But it was flagged as a critical audit matter by their own independent auditors.
Yeah.
What exactly does that mean for someone reading the report? Why flag it like that?
Right. A critical audit matter, or CAM, is basically the auditors telling you, the reader, hey, this particular issue was especially challenging, subjective, or complex for us to audit. It means it involved difficult judgments. So while Steris contests the IRS view, the auditors are signaling that this is a significant item, involves uncertainty, and warrants your attention because of its potential impact and the judgment calls involved in accounting for it. It just underscores that financial complexity.
Okay, so stepping back, what does this all mean? Connecting the dots. This deep dive into the Steris 10K, it really paints a picture, doesn't it? A company deeply embedded in vital global healthcare, successfully navigating a landscape that's just full of opportunity, but also clearly significant and evolving challenges.
It really highlights the intricate balance required for a global leader like this. You need continuous innovation in life-saving products. You need rigorous adherence to quality, complex regulations, proactive management of ESG responsibilities, and strategic financial moves like that dental divestiture to strengthen the core business. And their ability to keep growing financially, boosting revenues, net income, free cash flow, even while dealing with major things like that EO litigation, preparing for new ESG rules. It really is a testament to their operational resilience, their strategic foresight, all while aiming for that mission of a healthier, safer world.
It definitely leaves you thinking about the constant, multifaceted adaptation needed today, not just for the bottom line, but for a company's core purpose in a world that just keeps changing. It was a Revenue Radio podcast. Thank you for listening. Please like, subscribe, and hit the bell to stay updated with our latest analyses.